Hello everyone, Buffy the Rate Slayer here, and welcome to the latest episode of our weekly Market Insight series, which comes to you directly from the Capital Markets Trading Desk at SunWest Mortgage Company. Let's get to it. Markets took a cautious approach this week as investors awaited more clues on the Federal Reserve's stance for the interest rate cut in September. Treasury yields climbed on Thursday after incoming data and comments from the Federal Reserve officials suggested that the central bank would take a cautious approach towards interest rate cuts. Boston Fed President Collins said that she expects the central bank to begin easing interest rates at a gradual, methodical pace, while Kansas Fed President Schmidt indicated that he wanted more data before supporting cuts. The minutes from the Federal Open Market Committee July 30th and 31st meeting were released this week. The document disclosed that Federal Reserve officials moved closer to a long-awaited interest rate reduction, but stopped short while indicating that a September cut had grown increasingly probable. It also stood out that there was an inclination among several officials to start easing rates at the July meeting, rather than waiting until September. Markets are fully pricing in a September cut, but the size of the cut is up for debate. And on Wednesday, the Labor Department indicated that actual job growth was nearly 30% less than initially reported from April 2023 through March 2024. As part of its annual benchmark revisions to the non-farm payroll numbers, the Bureau of Labor Statistics said that the U.S. economy created 818,000 fewer jobs than originally reported for the time frame. The revision to the total payrolls level is the largest since 2009. The revision suggests the labor market started moderating much sooner than originally thought. Even as mortgage rates eased for the third week in a row, mortgage activity retreated during the week ending August 16th. MBA mortgage applications index fell by 10.1% for the week after, rising 16.8% the week before. Refinance activity plunged 15% week to week, but was still up 90% when compared to the same week in 2023. Purchases sank to their lowest level since February after dropping 5.2% from the previous week and were 8% lower than a year ago. The average 30-year fixed rate fell to 6.5%, the lowest since May 2023. The labor market reported that initial claims for unemployment benefits increased by 4,000 to 232,000 for the week ending August 17th. The 4-week average for initial claims fell from 236,800 to 236,000, the lowest in a month. The data shows a gradual cooling of the labor market instead of the feared rapid slowing. Continuing claims edged up to 1.86 million in the week ending August 10th. Boosted by the service sector, the U.S. S&P Global Composite PMI showed some resilience in August with a reading of 54.1, beating expectations of 53.5. This marks the 19th consecutive month of overall private sector expansion in the United States. The Flash Services PMI index rose to 55.2, up from July's 55, surpassing the forecast of 54. On the other hand, U.S. manufacturing activity shrank early this month at the fastest pace this year, as the Flash Manufacturing PMI index fell to 48, down from both the previous reading and the expected 49.6. Existing home sales improved in July, ending a 4-month losing streak. Contract closings increased 1.3% from June to a seasonally adjusted annual rate of 3.95 million, meeting forecasts. However, sales slipped 2.5% from 1 year ago. Gold prices hit an all-time high this week after topping $2,500 per troy ounce. It has gained more than 20% this year, in part driven by the view that the Federal Reserve will start cutting interest rates very soon. And that's it for this week. If you like this video, please hit that like button, share, and subscribe. Join me on Fridays here to stay updated with the world news. Our trading desk will have the latest information about our pricing incentives, so stay locked in so you never miss out. Have a fantastic weekend, everybody. Buffy out.